In this video, we're going to look at the 4-day pullback trade for swing traders. Stay tuned. Hey traders and investors, a very warm welcome to you. Okay, so many of us are swing traders. We're looking for those trend moves to jump on. This is a good way of jumping on a strong trend. We're not chasing it, waiting for the pullback. It's a way of timing that pullback. There's plenty of ways of doing it, and this is another good, powerful way of doing it. The main thing about this is it stops us chasing. The rules are very simple, they're very methodical, and it's a good structure to build a trading strategy from. Let's look at the rules. Let's get started. Right, so I put for FX swing traders here. I think it works very nicely for majority of assets, high liquid assets, whether it's high market cap stocks, indices, commodities, or currency pairs and major currency pairs. So the first step of the rule is the market must make a new 20-day high. This is just a way of gauging strength, right? We know how this works, guys. You need something to gauge, a filtering process, so that you're filtering out stuff that's what you're looking for. In other words, we're looking for strength here. So this is just a strength filter. The market's going to make a new 20-day high. Number two, wait for a 4-day pullback. So if I draw the chart here and we kind of do it on the fly, can we see on the board we can? So we've got pushing up, pushing up, pushing up, pushing up. Let's say it's a new 20-day high. Now we're waiting for this 4-day pullback, and I'm going to use a purple pen here for the 4-day pullback. So 1, 2, 3, 4. Okay, that's part two. So we've got 20-day high, 4-day pullback. On the 5th day, the close is going to be above the close of the 4th day, not the high, the close. So if we've got our bar, let's say it's a bar here, we've got opens, close, opens, close, opens, close. You know, on the 5th day, we now want to see, I'm going to use this in black. We want to see, it doesn't matter where this has gone, but all we want to see is that it's actually closed above the close of day 4, which was here. So we've got 1, 2, 3, 4, and this is day 5, right? So it's a way of saying, hey, you know what? This is pulling back. We've got strength, check. We're waiting for the pullback, check. Now we're waiting for the end of the pullback. It's a kind of way of judging a marker, a trigger to say pullback has ended, let's get on it. We've seen the 4 days of counter trend move. I would add the caveat that we don't want to see this go into too deep. We'll talk about that in a second. 5th day, close above the 4th day. How do we make the trade? We buy at the close of day 5. So there's our long there at the close. And we use a stop at the low of that day. So here, wherever that may be, that might not be lower than that, it might be higher than that, depends where it is. Obviously, all markets are going to be different, but your stop is going to go here, minus 10 pips. Okay, so you're not going to just put it at the low, you're going to give it a 10 pip bit of movement here. So the most you're going to lose is about a day's worth of range, right? Depending on how high that candle's gone, but an average day's range, which if you can handle, you just have to adjust the position size to suit that. And your target is going to be very, very systematic and very methodical, 3 times your stop. So if your stop if the range was 60 pips, or from close to low was 60 pips, plus your 10 is 70 pips, your stop is going to be 7 times 3, 714, 210 pips. Sorry, your target is going to be 210 pips. Your stop is going to be 70 pips. So very simple, very methodical, and that should take you kind of above the high and give you a nice way, a nice kind of easy target to aim for. Very systematic, very good trade. So what are the things we've got to watch out for on this one? What we don't want to see, guys, is this encroaching too far into the drive territory. I've talked about this before with other setups. You know, you want this strength, and that 20-day high is a good way of filtering for that. You might want to add something more into that, like an overbought stochastics or an ADX high reading above 30, something like that. Doesn't really matter. The point is we're using it as a filter for strength, waiting for the pullback. 4 days gives us enough time to see some kind of counter trend move. Fine. Day 5, like I say, we don't want this coming down. If it starts to encroach, you know, below 50% of that drive, I'd be a little bit cautious of it. You want to keep it as high as you can. You want to see the bears are making some effort, but not enough to make too much damage to the stock or to the index you're trading. And then day 5 obviously is the reversal day, and you see hopefully that it's going to continue with strength. That's the first time of the strength, and it's going to push the highs. A very simple stop placement, low plus the 10 ticks, and then 3 times the distance of that stop for your target. So pretty simple strategy, pretty powerful strategy. Makes a lot of sense to me in terms of supply demand. Have a go at that. Have a look at integrating it into your trading strategy yourself. How can you tweak it? How can you adjust it to suit you? And let me know how you guys get on. All right, that's the 4-day pullback trade trading strategy for swing traders. See you next one, guys. Take care. Keep the risk managed. Whatever you do, make sure you keep an eye on that stop loss. Take care. Bye-bye.